Good morning, traders. Thanks for joining. It's 8:01 a.m. Chicago time on Monday, June 23rd, 2014. Trading futures options on futures and foreign currency involves substantial risk of loss. It is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Quick round, as always, of what we had overnight. Nothing really major. ECB's Draghi released a comment over the weekend saying that QE would be used to address the deterioration of inflation expectations, could include government bonds and private loans. The Bank of England's Haldane rates will not return to pre-crisis levels. He says the new norm likely means rates of 2 to 3%. So the Bank of England setting expectations for rate hikes once they happen, and then follow that by Bank of England's Miles reiterates that the first hike likely to be appropriate before he leaves the committee in May of next year. So the Bank of England's really signaling that they're getting ready to raise rates. This is important. The Eurozone Services PMI came in below expected, 52.8 versus 53.3. That came out at about 3 o'clock Central, and if you look at your overnight chart, just before that, just before that, we had a drop in the overnight session, and apparently that's the market's anticipation in reaction to it. Eurozone manufacturing PMI also missed at 51.9 versus 52.2. And then China June HSBC PMI manufacturing beat actually came in better. If you recall, this number in January caused a pretty big reaction across all indices. And then the last bit of news is that ISIS, the militants basically taking over Iraq, made further gains over the weekend and are now effectively in control of the Iraqi, Syrian, and Jordanian borders. So this is becoming a real problem. Not only are these guys supposedly brutal, that Al-Qaeda decided to distance themselves from them, but they have gained a lot of ground, and since they control the border, this could mean a bigger mess in the area and a bigger reaction expected from the U.S. as it puts Israel in danger. And also, Jim Carrey, Secretary of State Jim Carrey, made an unannounced trip to Baghdad to deal with this issue. Key economic releases going forward at 8:45 Central, 15 minutes after the open. U.S. manufacturing PMI prelim comes in expected at 56.0. That might see a reaction. At 9 o'clock, we have existing home sales, 4.7 million expected. At 10:30, ECB's Nowotny is a keynote speaker. And then at 10:30 also we have 3-month and 6-month bills, 25 billion and 23 billion respectively. Let's look at the markets and what we did last week and what we're anticipating here. So this is the overnight chart here, or 24-hour chart really. This is Friday night or Thursday night into Friday morning. Here's Friday's trade, very tight. We'll talk about that in a second. And then last night, very strong buying, and it looked, I was here when this happened, it looked very, very, very algorithmic, very bizarre buying behavior here. Just a lot of lifting on the offer, but nobody hitting the bid at all. So you have this strong delta move up. I cannot explain this activity at all. It's just very strange. And then we have the market rolling over as the European markets open, and then we put in a bottom on the economic release, the PMI numbers. pull back to the mid of the session, and then stuck here at the low with a B-shaped profile, weakish low, and pretty decent volume actually on the overnight. This could potentially signal that today we might see some activity that's better than we did last week for quad witching week. So it's showing that the market's got a fair amount of activity. 56 being the key LVN and the mid, 55 being Friday's high. I'm putting this down as the over-under for today, the over-under line for today, 56, 55, 50, 56. You want to make a note of that level. As far as Friday, we had an open auction out of range that just drifted downwards. The opening swing was 55.50 to 52.50 from there to there, which was pretty much the entire day's range. The market dropped 2 more ticks to form the initial balance right before the first hour was up. And then what we had on Friday was an extraordinary day. It was OPEX Friday, so that comes into play, quad witching Friday. But the OS being at 55 to 50, 55.50 to 52.50, the IB being 55.50 to 52, just 3.5 points. The probability, the historic probability over 1,400 days of samples for the market to have a normal day, which is what's called a normal day, which is for the market not to break the low or the high of the session during the entire session, is somewhere around 2 to 3%. I forget the exact statistic. That statistic was taken from April, going back 1,400 days. The probability is like 2 to 3%. I forget what it is. The number of days basically in a sample where the market does not break. The probability that the market does not break on a 3.5 point IB is Friday. There's in the sample there was none where it occurred. Now take those two things. The probability of the market having a 3.5 point IB on options expiration and not breaking is like those Discover card commercials or MasterCard commercials. It's priceless. It's actually non-existent. This is the first time going back to 1999. This is the first time that this has happened. And it did so on fairly okay volume, 905,000 contracts traded. You could see here the daily volume was highest during the Fed decision, okay, where we had 21 points of range. But essentially, I know this looks like a middle finger, but essentially, we've been in the 1 million to 900,000 to 1 million contracts during the day session kind of volume for the entire week basically. Fridays was not that much lower. Look at Friday; it's only 905 versus 1 million. Not too bad yet. Even though there was all that activity, there was just a complete inability to break the IB high and low. It's just it's mind-blowing, to be honest, to see that, to witness that. I would have bet against the IB high or low holding. I would have bet against that in a heartbeat, given the historic propensity of the market to always to more likely break those, overwhelmingly break those. So I think that should be noted. As I said, there was no I have no instance going back a long ways. I have no instance of that happening before. I just did a 1-hour chart going back to 1999. The point of control moved higher, so we have a new high on the point of control, new high on value, new high on prices as of Friday. Okay, and then of course, as I said, the volume was pretty much in line, pretty healthy volume despite the action. The overnight broke it by 4 points, broke the high by 4 points. So we've already explored higher, and again, you'll want to watch this 55, 50, 56 area in the morning to kind of tell us which way the market's skewing. Profile type. The profile is definitely a kind of an odd normal distribution, very, very balanced, very much coiling. This profile here portends, like I said, pretty large movement. The overnight low at 52, triple bottom at 52 with the overnight, double bottom on the day session, double top on the day session as well on Friday. So an interesting fact that the 52 did not break. I want to shift gears for a second, even though we're talking about Friday and the price structure of Friday. I don't have anything further to talk about here with regards to Friday's trading, but I want to shift gears to my market profile for the month, and I want to highlight certain prices. We have a key CLVN here at 5175, which is right beneath that 52 double bottom that we left behind on Friday, and then we have a string of singles down to 1950.75, and then we have the next area to test is likely to be 1937.75, then 1931.25. A big test in 1916.75, a very big CLVN area on the month. These are monthly profiles here, and you can see how the market's forming distributions and moving out of them, forming distributions and moving out of them. It's really important to note what these distributions are. Okay, value almost coincides with this level here, 43.75, that area. But you want to keep track of how the market makes these distributions, because generally what it does is once it breaks through the CLVN, it's likely to test the high volume node first, and then if it cannot find any support at the high volume node, it's likely to crawl right back up to the low volume node, and then the market needs to decide, is it going to slip through and push to the next high volume area, or is it going to slip back through back to the high volume node, at which point if the market does that, the situation where the market breaks through the CLVN, goes to the CHVN, the high volume node here, pulls back up to the low volume node, and then falls back through. To me, that is a change in the intermediate to short-term disposition of the market. The next target down will be 43.75. That's the next area it would naturally walk to. Test that, probably turnover, and if it cannot find buyers here, it'll likely break into the next area, test the high volume node, and then come back to 43.75-ish, and if it cannot find buyers, to break back up above that, and so on and so forth. There's no way to tell if those areas are going to hold or not. That's just not how the auction works. This is not a trading system. It's not here to predict what will happen, but it's here to tell us what the market's doing, what condition is. It's kind of like putting a stethoscope, like a doctor would. You know, a doctor cannot make an assessment by just looking at you. They need your vitals, they need your blood pressure, your heart rate, they need blood work, and all that stuff. And that's what this is. We're looking inside of the markets, in our workings, and taking assessments of what the likely condition is, but it's still, even though your doctor takes those vitals and so forth, the doctor's prediction as to how you're going to get cured or what the situation is still a probabilistic guess. A doctor still has to guess as to what the issue is, and then you go through the process of trying various drugs or various treatments. Same thing here. We can tell that the market has moved in a certain direction, but we can't tell what it's going to do next, but it gives us an outline, a story to follow along, a script to follow along, and then based on the action, we can assess what the risk return might be for a trade. We still have the gap and the point of control, the naked point of control below us at 50. So for me, the primary hypothesis is to wait out the first 10 minutes, 10, 15 minutes, get this prelim PMI number out of the way. If the market does not break 56 on a test, then I'm looking for a break of 52. I'm not expecting a big flush or anything, but remember, this was a balanced consolidation day. The market generally does not make a high and then turn right away. It makes a high, rolls, and then starts to make a turn, and this may be the day where it rolls over. Remember, Friday was a really, truly an exceptional day. I wasn't here to trade it, but it was definitely an exceptional day. So the better situation for day traders is for this to test higher, fail, roll over, and move towards 50, and then start to eat into what we had from the Fed day and what we put in on Thursday. But I don't have very high hopes for a lot of selling, but I do know that there's a powder keg here that's been nicely compacted, and it may have some explosive power if it does go into sell-off mode. So if we do break the overnight low and start to push down, watch your delta, and I would not stand in the way of that until well into the lower. You have to bring in the Fed day, and you'd have to look at the reactions of 42.75, and then the expectation is if that doesn't hold, then we're looking for 37. 42.75 happens to be the LVN. The next LVN down on Fed day, we tested the first one on Thursday. The next LVN down on Fed day is 42.75, but it's also the mid of this run-up on the Fed. The LVN zone is at 42.50, so that would be the next target lower. If not, then if the market battles this out and then maybe tests 53 on the high volume node, the point of control of 53, finds bidders and starts to break above 56, then you're looking at 59.75 for a high probability test, and then a continuation higher, and at that point we would have to pull in our messy mess of measured moves, and the next measured move up, a key double measure move area is 67.5, 68 area gives me a double target on the upside. That's only 6 or 8 points above the overnight high. Those are the two primary ideas for today. As always, they are just ideas, and we need to have some sort of an idea before we can figure out and get ourselves in alignment with the market. That's the whole point of this exercise. But pay attention to your bigger picture. I like to use this monthly profile. If not, then just up a monthly volume profile. It's the same thing. Pretty much looking at the fundamentals chart, it's trekking along. On this last pullback, we couldn't even get to the middle of the channel. It's trekking along on new highs. The 52-week highs are pretty strong. We made a high here on the 52-week highs with the high that was put in the other day on the 9th. The 52-week lows on New York Stock Exchange continue to flatline. There's just no pulse there. The put-call ratio showing that very little insurance is being bought, or relatively little insurance is being bought. But volumes overall, the net issues and net volumes, as you can see, have been on a downward trend and are steady sideways since since last year. If you remember, I talked about the delta being a problem with this market, in that as we push higher on a long basis, the delta is just not playing along. Okay, so here's an image of that. As we push, the delta is highest way back here, and as the market pushes higher, you can see the market starting to push higher here. The delta is going down, and it just continues that way. The market's pushing higher pretty good, and the delta is just flat to down, and it just continues that way. It's just been going on for a very, very long time. It's interesting, it's baffling, but it is what it is, and our job is to just see it and respond to it. Value movement, the orange that you see on this chart is the migration of value. This is what the market sees as the value price ranges, and then the red bars within those are the points of control, and the markets, the value and price and the point of control are all confirming each other. Long-term, intermediate term, and short-term trends are up. So if you're short, you probably should be nervous. So that's what I have for you in closing. I'm looking at the weekly. Tomorrow, German IFO, USK Schiller, new home sales, and then Fed's Plosser and Williams. Wednesday, U.S. durable goods, GDP, ECB's Lind talks. Thursday, U.S. jobless claims, PCE, personal income, BOE's Carney, and Fed's Lacker and Bullard. And Friday, German regional CPI, national CPI. That's going to be important for our European listeners. UK current account, GDP, and U.S. Michigan confidence. So the week's got a fair amount of interesting releases, but nothing really earth-shattering. It is the last week of the month, basically. I think the 30th is next Monday, the last full week of June. Believe it or not, June is over. So I'll leave you with that. Good luck today, and I'll catch you soon. Take care.